us. Let's talk about the trade situation in the markets. Joining us for that is Jeb Hensarling. He is the former congressman from Texas who served as Financial Services Committee chairman. Jeb is now executive vice chairman of the Americas at UBS. He's also a senior fellow with the Milken Institute. Also with us, Jim Keenan. He is chief investment officer at BlackRock. And, gentlemen, I would have to say in the short term, the big issue the market's got to be thinking about are trade talks with China. We're facing that December 15th deadline. Jeb, you're the expert on things happening in Washington. What do you think is going to happen with this deadline? Will we see additional tariffs put on December 15th?
Well, I kind of doubt it, but we've known for quite a long time we're kind of on a roller coaster ride at night. It's going to have lots of ups and downs. You don't know what's around the next corner. But I think at the end of the ride, everybody's going to be in pretty good shape. So if I'm, Secretary Mnuchin, if I'm Larry Kudlow, I'm whispering into the president's ear, we better get this done. We all know that economic policy typically takes, as long as 9 months to filter through the economy. We know that a lot of CapEx checkbooks have closed over the trade anxiety. So I still think that odds very much favor a starter deal. If the president thinks that he's close, I don't think he will impose the tariffs, but I must admit I've decided not to make my living trying to predict what this president will do. But at the end of the day, I think it's very important. He knows he has to get this done. But I'll tell you, on the other hand, which is what economists love to say, speaking to various people in the administration, I think if necessary, the president's totally prepared to run against China.
That would be my guess, too, because Larry Kudlow and Mnuchin may be whispering in his ear on one. Peter Navarro is going to be whispering in the other direction. And by the way, I think President Trump himself thinks that this is an unfair trade situation. So he probably leans towards that side of the fence in terms of where he comes down.
Well, of course he believes that. But again, this is just phase one of what he needs to accomplish. On the other hand,
But he's got to get something in phase one, right?
I believe so. On the other hand, if I'm sitting there in China, I'm thinking, you know what? I'm not going to get a better deal from this guy if he gets reelected, because then it's totally Donald Trump unplugged. And if the Democrats go hard left with Senator Warren, I might even get a worse deal. So I have to be calculating that, and we know that growth in China...
We're still talking about a baby deal.
I think so. I think now...
No, but in terms of the calculus, you're talking about a baby. This isn't like I want to get through these other issues with China ahead of the election at all.
Jim, can I just ask you, initially, when President Trump decided to take on China, I thought that it took... I didn't think it was done for political reasons, and I thought he did it at great peril because he had an economy going because of tax cuts and deregulation. He had a market going, and I thought that he was doing it because he really believed we need to do this, and it was his own political peril. But now it's playing into his, as you just said, his base probably would like him to continue to take. Did he know in his mind that it was going to become something that it was a positive for him politically all along, or what was the calculus there? Because I used to commend him on, look, you had the nerve to do that when it could have caused a slowdown in the economy, which means you won't get reelected. Do you think he always knew?
When I was in Congress and met with the president, I knew one thing that he was committed to, and that was to get the trade deficit down.
Okay.
And with China, he felt like, again, we had been getting ripped off for so many years. And it's not just the president. I mean, Democrats, Republicans, everybody has somebody in their district who has had their technology expropriated by the Chinese.
Jim, if Jeb is right, and this is a situation where we don't see additional tariffs put on, what does that mean? How do you kind of figure the calculus based on the idea that we're probably going to have the Fed say that they're not doing anything anytime soon?
Well, I think in the near term, I think the market's already pricing in the expectations that there's not going to be a tariff put on over this weekend. But I think if you just take a step back, you're dealing with two economies now that have grown at scale, that this is a long run where they're going to compete against each other, right? The global growth picture is slower and lower than it has been for the last 30 years. And what you're seeing right now is two economies that are learning how to try to compete with each other. And the rest of the world is trying to figure out how to deal with America and China as they start to deal with each other. So I think it's a lot about jobs, right? And some of the long-term impact is you're still, whether it's regards to tariffs or it's a little bit of deglobalization, right? Some of those, the supply chains, the labor has utilized the global labor force for a long period of time, and that's led to limitations on labor income. And now you're seeing some of that move.
I think it was Steve Leisman, I'm hoping I'm sourcing this correctly, who told me earlier this week that if you strip out China growth, if you are no longer selling to China, the U.S. multinationals don't have any growth over the next several years. What do you think of that idea?
Yeah, well, if you look at, I mean, just China, but emerging market growth, they've been such a significant portion, over 50% of the global growth over the last decade plus, right? And so there's a level of maturity that they're getting to. And again, that's why the global growth picture looks a little bit lower. There's headwinds associated to the amount of debt in the aggregate system. So it's a different environment that we're moving towards now. And I think, the U.S. is competing for a greater share of that.
And in that environment, you would do what? Buy U.S. stocks, buy international stocks, avoid both?
Well, I would say in the short term, we like international stocks just because of the outperformance of the U.S. I think from a long-term aspect, we have to deal with the fact that where valuations are, what the low growth picture looks like, probably a pressure on sustainable inflation, although we do think we'll see some labor inflation over the course of the next year, aggregate returns are going to be low. So to make real returns or alpha above that, you got to be able to capture some dispersion, right? So because there are going to be winners and losers in this economy, both by regions and or companies.
Jeb, we're out of time, but I can't let you go without asking you about USMCA. What will it mean for the markets if that actually is passed?
Well, I think there was a great fear that we might end up with nothing, even though it is questionable whether or not the president could essentially wipe out NAFTA. So I think it'll be very encouraging. I mean, there is some debate what an improvement it is over NAFTA, but I think it'll calm markets. I think anything that says we're not going to have an escalation of a global trade war is going to be good for the markets.